If you're a non-US entrepreneur thinking about opening a US LLC, there's one question you need to understand before you do anything. How will the US tax this company? Because forming a Wyoming LLC is easy. Understanding what happens after you form it is where the things get complicated. So in this video, I'm going to break down the basics of Wyoming LLC taxation for non-US founders. How US Wyoming taxes an LLC, when the US taxes your business, and the difference between US source and foreign source income. What changes if you're actually operating in the United States, what filings you may have, and what you need to do before you can create the company. Let's get into it. Why Wyoming? Wyoming is popular with international founders for a reason. There is no Wyoming individual income tax and no Wyoming corporate income tax. There's also no traditional franchise tax. That can make Wyoming very attractive for entrepreneurs who want a US entity without adding a state income tax layer. You also have relatively low ongoing state costs compared with many other jurisdictions. So here's the important distinction. No Wyoming income tax does not mean no US tax. Your LLC can still have federal tax obligations, and that's where the most people get confused. The biggest misconception, a lot of international entrepreneurs hear, Wyoming doesn't have income tax, and they immediately think, great, my US LLC is completely tax-free. Not necessarily. The US federal tax treatment of your LLC depends on several things. How the LLC is taxed, what your business actually does, where the income comes from, where the business activities take place, whether the business is considered engaged in a US trade or business, and whether a tax treaty applies to your situation. So don't look at the LLC state in isolation. You need to look at the entire structure, US source income versus foreign source income. This is one of the most important concepts to understand. Not all income is treated the same way for US tax purposes. Some income can be considered US source income, other income can be considered foreign source income. And the rules to determine the source depends on the type of income. For example, the sourcing rules for services can be different than the source rules for interest, dividends, royalties, inventory, or other types of income. So you cannot simply say, my company is American, therefore all of its income is US income. That's not how it works. Then there's a US trade or business. This is where things become particularly important for foreign founders. You may hear the term ETB or ETBUS, engage in a trade or business in the United States. In simple terms, the question is whether your business has sufficient US activities to be treated as an operating trade or business in the United States. And this isn't determined simply by asking, where is my LLC registered? A Wyoming LLC can be registered in Wyoming while its owner lives in Europe, Latin America, Asia, or somewhere else entirely. The important question is what the business is actually doing and where those activities are taking place. If you're physically operating in the United States, using people in the United States to perform substantial business activities or otherwise creating a meaningful US business presence, the tax analysis can change significantly. That's why the structure matters. And tax treaties can change the answer. There's another layer that many international entrepreneurs overlook, tax treaties. The United States has tax treaties with a number of countries. Depending on your country of tax residence, the type of income and the facts of your business, a treaty can affect how the US taxes your income. Concepts such as permanent establishment can become important. So if you're a founder living outside the US, don't assume that your US LLC automatically means you'll personally owe US income tax on every dollar your company earns. But don't assume the opposite either. The details matter. What about actually filing taxes? This is another major misconception. Even if your LLC ultimately has little or no US income tax liability, you may still have to file US obligations. For example, certain foreign-owned single-member LLC can have information reporting requirements, including the Form 5472 filled with a pro forma 1120. The exact filing requirement depends on your ownership structure and the tax classification. A multi-member LLC can have a completely different filing profile. And if you elect to have the US LLC taxed as a corporation, the rules change again. So before you form the company, you need to understand who owns it, how is it taxed, where does the business operate, what type of income does it generate, where is that income sourced. Those questions determine how much more than simply choosing Wyoming. For federal tax purposes, an LLC can potentially be treated as a disregarded entity, a partnership, or a corporation. The default treatment depends on the LLC ownership structure, and certain LLCs can elect a different classification. There isn't one universally correct answer. The right structure depends on the business, the owners, the countries involved, and the type of income, and the long-term plan. So don't choose your tax classification because someone on YouTube said this is the best one. There is no universal best structure. There is only one structure that makes sense for your specific situation. What about the owner? This is where foreign founders need to be especially careful. Your LLC is a US entity. You are still a foreign individual. Those are two different things. Forming a Wyoming LLC does not automatically make you a US tax resident. It also doesn't automatically mean you personally owe US income tax on all your worldwide income. Your personal tax obligation depends on your own circumstances, including where you are a tax resident and what the LLC is doing. And that is why you should separate two questions. How is the LLC taxed and how am I personally taxed? They are related, but they're not the same question. So, is a Wyoming LLC tax-free? Here's the honest answer. No. Wyoming itself does not impose an individual corporate income tax, but your US LLC can still have federal tax and reporting obligations. And depending on what the company does, where it operates, how it is structured, and where the income is coming from, federal tax may apply. That's why the real advantage of Wyoming isn't zero tax. The real advantage is having a relatively simple US state level environment combined with a US business entity that can be useful in international trade. Before you form one, understand the full picture. If you're a non-US founder considering a Wyoming LLC, don't start with how much does it cost to open. Start with what am I actually going to do with this company? Are you selling software, running an e-commerce business, providing consultation, holding investments, operating a US business, real estate, selling services outside of the US, having employees or contractors in America, receiving payments from US customers? Each situation can produce a different tax analysis, and that's why copying someone else's LLC structure can be a bad idea. Their business isn't your business. Their country isn't your country. Their tax residency isn't your tax residency. Their income isn't your income. The bottom line is a Wyoming LLC can be a powerful piece of infrastructure for an international entrepreneur, but don't fall for the simplistic version of Wyoming zero tax. That's not the point. The point is understanding how the US entity, federal taxation, state taxation, income sourcing, your business activities, your personal tax residence, and any other applicable tax treaty fit together. Get the structure right from the beginning, and your US company can become a serious piece in your international business structure. Get it wrong, and you can create unnecessary tax billings, filings, obligations, and compliance problems. So before you form the LLC, understand the tax structure, because forming the company takes a few minutes, but fixing a bad structure later can take years.